Good morning and welcome to the Johnston Grocke Weekly Update, a series that we're doing at the moment to keep you guys informed with what's happening at the moment. So we'll throw over to Anthony Clatt from a financial planning perspective. Mate, what's happening this week?
Yeah, lots is happening this week, as has been the case for the last few weeks. I suppose, two or three key takeaways are that volatility is still there, and the markets are swinging one way or the other continuously. And that volatility will stay until there's some certainty around where we're going from here. The market does look ahead, so as soon as we do start to see some certainty, we will actually possibly see the market start to move upwards. But at the moment, that volatility is going to remain. So yeah, it's important to understand that the market does understand or does look ahead and see what's happening at the moment, and therefore most of what's happening has been factored into the prices that we're seeing at the moment. From a security perspective, especially for those that are relying upon their income, it's important to keep that liquidity, so keeping that cash and term deposits, knowing that they're not going to be a forced seller, they're not going to have to sell something to meet their daily needs, if you like. Now's probably not the time to be a seller, but certainly I'm starting to receive emails and communication from people asking when's it time to be a buyer. And I think the message there is that any buying certainly should be staged, but it also absolutely must be done with some advice. So that's probably the key messages. Volatility to remain until we see certainty, and if you feeling like you need to be a buyer going forward, then certainly make contact with us to talk about that. If you're concerned about your income, remember you've got cash and term deposits, and certainly also give us a call. We'll have a chat in relationship to how you stand from that perspective.
I think one thing to take some comfort is history shows throughout every event through history, it recovers.
Yep.
So if you can stay in the market, it will recover back.
Correct.
Yeah. Andy, from a tax, accounting, SME space, which is a really hot topic at the moment with the economic impact of what's happening at the moment, what's happening in your world?
So, announcement of the federal government last week, there's been a $25,000 concession, mainly for small businesses, so not affecting large businesses. So in the space that we play in the SME space, there's a $25,000 benefit. Now, without going into detail, it can be managed through your GST or BAS regulation. So any queries, shoot us an email and we'll fill you in a little bit about that. But I'll take on from Anthony's point of view about liquidity. So much more important even now. So for businesses that are running through liquidity crises or liquidity problems, come and have a chat. We need to talk about that if you haven't got that all sorted already. To some degree, the horse is bolted if you haven't got it sorted, but we will work through that. But on a positive side, because there's yin and yang with these things, there's opportunities. So people who have got cash, and the old term cash is king, which we throw around a bit, but that's quite relevant. There's opportunities for SMEs to develop their businesses further and take opportunities in preparation for when we do swing out of the downturn and the softening of the market. Now's the time to start preparing for these things. To do it later on is actually too late. So there's a bit of preparation to do now if you want to stay in the business and keep going forward in the future.
Andy, one more thing for businesses that need to invest or buy equipment and things for their business, there's the instant write-off, which is increased.
Instant write-off, so up to the end of June, $150,000 for SMEs. So that's quite a lot of instant depreciation. Of course, you only get the tax benefit of that, which is dependent on the marginal tax rates of the various entities that you use, but it's an incentive for people to invest looking forward, again, for the business and capitalise their business appropriately.
From a lending perspective, what you'll see is, you would have noticed yesterday, being Thursday, that the Reserve Bank met for a out-of-cycle interest rate meeting. They have cut the cash rate by 0.25% down to 0.25%, so the lowest that we've seen historically in Australia. Will it have any impact? I don't think it will at all, because I think the punch has just gone from it. The impact for people at the moment, if they're saving $100 a month on their mortgage, that's actually not the biggest worry at the moment. That's not going to stimulate the economy, so we don't think there's going to be much effect at all. I think it's really just lost its effectiveness. What we are seeing though is the banks are now being supported by the government to encourage assistance for small business through this time. So that is, watch this space. We'll provide more of a detailed update next week, because that's going to be a really big space at the moment. The banks have already come out as well and said for some of the residential home loans, they're not passing on that rate cut at all. So that's going to be interesting. So watch this space. Thank you very much for watching. We will be back next Friday with an update. If you've got any questions, by all means, sing out and stay safe. Thank you.